Day trading. What it is, how it works and if you should try it, this and much more in this video. Hello and welcome to the Business Class, your YouTube channel, where you learn all about the topic money. Although money and wealth are not everything, you barely get anywhere without in our modern day society. Seemingly everyone nowadays wants to be rich, famous and live a life in wealth, but of course not everyone will manage to do so. However, if you are determined, focused and working hard, you will be able to achieve your goals. So do no longer waste your potential, do no longer wait for your luck to happen from alone, improve yourself every single day and you will soon start to see the fruits of your success. With my videos, I want to provide you with motivation, knowledge and inspiration, so that you can reach your goals as fast as possible and make the best out of your life. If you have general interest in content about topics like make money online, stocks, luxury and lifestyle, subscribe to the channel and press the bell button, to not miss a single video. Also write a comment with your suggestions and wishes, which content you would like to see more often. And now let's start. A number of years ago, the only people who could engage in active stock market trading were those employed by sizable financial institutions, brokerages, and trading houses. The introduction of online trading and the rapid dissemination of news have leveled the playing field, or should we say trading. Services like Robinhood, with their simple-to-use trading apps and 0% commissions. If done correctly, day trading can lead to a lucrative career. However, it might be difficult for beginners, particularly those without a solid plan. Also, keep in mind that even the most seasoned day traders can encounter setbacks and lose money. Consequently, what is day trading and how does it operate? The day trading fundamentals. Trading securities in a day, or even in a few seconds, is known as day trading. It has nothing to do with investing in the conventional sense. It takes advantage of the price swings that are bound to occur during a trading session. The two places where currencies are traded and where day trading is most popular are the stock markets and forex. The majority of day traders have strong financial backing and are typically well versed in the details of trading. By using leverage to increase the size of their stakes, many of them add an additional layer of risk. Day traders are tuned in to the things that trigger quick changes in the market. One well-liked tactic is trading based on the news. Scheduled announcements like the release of economic statistics, corporate earnings, or interest rate announcements are influenced by market psychology and expectations. Thus, markets respond when these expectations are not met or are exceeded, typically with swift, significant moves that are very advantageous to day traders. Day traders employ a variety of intraday tactics. These tactics include scalping. This tactic is centered on generating a large number of minor profits from fleeting price changes that take place throughout the day. Range trading. In this tactic, the trader bases his or her buy and sell decisions on previously identified levels of support and resistance in the price range. News-based trading. Using the increased volatility that surrounds news events, this strategy takes advantage of trading opportunities. High-frequency trading, HTF. This type of trading makes use of sophisticated algorithms to take advantage of minute or transient market imperfections. Why day trading is debated. Day trading's potential for profit is a frequently discussed subject on Wall Street. Day trading frauds on the internet have attracted novice traders by promising huge returns quickly. Some people day trade without having the necessary knowledge. But despite, or perhaps precisely because of, the risks, some day traders are able to make a successful living. Day trading is avoided by a lot of professional money managers and financial advisors. They contend that the reward typically does not outweigh the risk. Additionally, a lot of economists and financial professionals contend that active trading strategies of all kinds frequently underperform a simpler passive index strategy over the long run, particularly after fees and taxes are taken into account. Day trading can be profitable, but because it is risky and requires a high level of skill, the success rate is necessarily lower. Also, don't discount the importance of good fortune and timing. Even the most seasoned day trader can be destroyed by a bad luck. How do day traders start out? The majority of professional day traders, Those who trade as a profession rather than a hobby have a solid reputation in the industry. They frequently also have extensive market knowledge. The following are some requirements needed to be a successful day trader. Understanding and market-related experience. Without knowledge of the basic principles of the market, day traders frequently lose money. A solid foundation in technical analysis and chart reading is recommended. Nevertheless, charts can be misleading if you don't have a thorough understanding of the market and its particular risks. Do your research and become knowledgeable about the specifics of the products you trade. Sufficient capital. Smart day traders only use risk capital that they can afford to lose. This keeps them from going bankrupt and aids in removing emotion from their trading decisions. To profit from intraday price fluctuations, which can be as small as pennies or fractions of a cent, a sizable amount of capital is frequently required. Day traders who intend to use margin accounts with leverage must have enough cash on hand. Big margin calls may be issued suddenly in response to erratic market swings. Strategies for day trading. An advantage over the rest of the market is necessary for a trader. Swing trading, arbitrage, and news trading are just a few of the tactics employed by day traders. They continue to hone these tactics until they reliably generate gains and minimize losses. Additionally, it is a good idea to abide by the following day trading fundamentals. Make informed trading decisions. Set up your entry and exit points in advance and follow them exactly. Recognize trends in the trading behavior of your choices beforehand. Discipline. Day trading's potential for profit is a frequently discussed subject on Wall Street. Day trading frauds on the internet have attracted novice traders by promising huge returns quickly. Some people day trade without having the necessary knowledge. But despite, or perhaps precisely because of, the risks, some day traders are able to make a successful living. Day trading is avoided by a lot of professional money managers and financial advisors. They contend that the reward typically does not outweigh the risk. Additionally, a lot of economists and financial professionals contend that active trading strategies of all kinds frequently underperform a simpler passive index strategy over the long run, particularly after fees and taxes are taken into account. Day trading can be profitable, but because it is risky and requires a high level of skill, the success rate is necessarily lower. Also, don't discount the importance of good fortune and timing. Even the most seasoned day trader can be destroyed by a bad luck. Who makes a living from day trading? There are two main types of professional day traders: those who work alone and those who belong to large organizations. Many traders who make a living from day trading work for large firms such as hedge funds or in-house trading departments of banks and financial institutions. These traders have an advantage because they have access to resources such as direct trades with counterparties, trading desks, large amounts of capital and leverage, and expensive analytical software. These traders typically seek to profit easily from arbitrage opportunities and news events. The resources of these traders allow them to leverage low-risk day trading before individual traders react. Individual day traders. A little hint for you: if the content of the video is important to you and you want to benefit from it in the future, you can easily save the video to your playlist or click on Watch Later, so that you can watch it again at any time you want. Or, if you don't watch this video as a logged-in member, just save the video as a bookmark in your browser, to always have easy access to it. Individual day traders often manage other people's funds or simply trade their own. Few of them have access to trading desks, but they often have close ties to brokerage firms because they incur significant fees and access to other resources. However, these limited resources mean that they cannot compete directly with institutional day traders. Instead, they are forced to take on more risk. Individual traders tend to day trade using technical analysis, swing trading, and leverage to make sufficient profits from small price movements in highly liquid stocks. Day trading requires access to the most sophisticated financial services and instruments in the market. Day traders typically require all of the following. Access to the trading desk. This usually applies to traders who work for large organizations or manage large sums of money. Trading or dealing centers provide such traders with instant order execution, which is extremely important. For example, when a takeover is announced, Day traders looking for merger arbitrage can place their orders before other market participants can take advantage of the price difference. Multiple news sources. The news provides most of the opportunities. It's important to be the first to know when something important happens. A typical trading room has access to all the major news channels, constant press coverage, and software that constantly scans important messages from news sources. Analytical software. Trading software is an expensive necessity for most day traders. Those who rely on technical indicators and swing traders often rely on software rather than news. Features of such software may include automatic pattern recognition. This trading software detects technical indicators such as flags and channels, as well as more complex indicators such as Elliott wave patterns. Genetic and neural applications. These programs use neural networks and genetic algorithms to complete trading systems and more accurately predict future price movements. Integration with brokers. Some of these applications work directly with brokers for instant and automatic execution of trades. This takes the emotion out of trading and improves trade execution times. Backup testing. Traders can look at how a strategy has worked in the past to more accurately predict how it will perform in the future. However, it should be noted that past performance is not necessarily indicative of future results. Taken together, these tools can give traders an edge over the rest of the market. Risks of day trading. For the average investor, day trading involves a number of risks and can be a tricky proposition. The Securities and Exchange Commission, SEC, highlights the following risks of day trading. The willingness to incur serious financial losses. Day traders usually incur significant losses in the first few months of trading. Many of them fail to make a profit. Day trading is a very stressful full-time job. It requires a very high level of concentration to keep track of dozens of tickers and price swings, and to identify fleeting market movements. Day traders depend heavily on borrowing money. The strategy of day trading is to profit by borrowing money and using leverage. Many day traders find themselves in debt and also lose all of their own money. Don't believe the hype about easy money. Newsletters and websites of day traders may offer hot information and professional advice, but educational seminars and classes on day trading may not be objective. Should I start day trading? If you decide to start day trading, you should be prepared to take the following steps. Have some knowledge of the trading world and have a good understanding of your risk tolerance, capital and goals. Have some knowledge of the trading world and have an idea of your risk tolerance, capital and goals. Start small. Focus on a few stocks so you don't beat yourself up. Starting small can complicate your trading strategy and lead to significant losses. Stay calm and don't let your emotions get in the way of trading. Do not deviate from your plan. If you follow these simple guidelines, you can have a steady career in day trading. How to get started in day trading. Successful day traders understand the discipline of technical analysis. Technical analysis is the identification of trading opportunities by observing and plotting price and volume movements of stocks, or other investments. Long-term trends show how stocks have moved in the past and suggest what they should do in the near future. These days, technical analysis is not usually done with paper and pencil. There are software packages that help create charts and graphs for this purpose. Day traders also have to plan before they make a single trade. They must decide in advance which stocks they will trade and in what price range, all in advance. Successful day traders leave no room for impulse buys. Finally, even a single trader should have a trading desk equipped with the necessary news services, real-time data and brokerage services to execute the plan. If you are trading on margin, you will also need a large amount of cash to deposit with your broker. This is not recommended for beginners, as there is a high risk of a trader going bankrupt and getting mired in debt. Instead, it is much better to start with the amount of money you can afford to lose. What are the first rules of day trading? The first rule of day trading is not to hold a position when the market has reached the end of the day. Whether you win or lose, you must sell. Most day traders take it as a rule not to hold a losing position overnight in the hope that they can partially or fully recover their losses. This is because brokers set higher margin requirements for overnight trading, which requires additional funds. There is a good reason for this. This is because stock prices can fall or rise as a result of overnight news, which can lead to significant trading losses for the stock owner. What are the margin requirements for day traders? According to Financial Industry Regulatory Authority, FINRA, rules, the minimum capital requirement for broker-dealer clients designated as pattern day traders is $25,000. This capital must be deposited into the client's account and maintained at all times prior to day trading. What is buying power in day trading? Purchasing power is the total amount of funds available to an investor to trade securities, equivalent to the cash held in the account and the available margin. According to FINRA rules, a broker-dealer client designated as a typical day trader can trade for 4 times the amount of margin available at the previous day's market close. Conclusion: day traders can make big profits or accumulate big losses. This is a very risky choice of profession. Both institutional and retail investors argue that day traders play an important role in the market by keeping it efficient and liquid. For retail investors, day trading has always been attractive, but they need to acquire the knowledge, resources and capital to have a chance at success. And if one day, you want to build up your own business or you have one already and want it to grow much bigger and faster, always have in mind that starting a successful business and earning money takes time. You need perseverance and a lot of stamina. It's like you growing a small plant right from the seed. You never know how fast it will grow, how tall it will get and how many fruits you will be able to collect. It is the same with every business, some work great, some flop and some could become very successful. But people way too often resign much too early. So follow my advices, try out different methods and sooner or later, you will find the one that suits you the most, that fits best to your skills and knowledge and you will have a well-earning business. No matter if you want to make money online, by affiliate marketing, drop shipping or even stocks, everything is possible. And even though growing a business and making money can sometimes be a lengthy and tedious issue, it's all worth it at the end. Just stay focused to your goals, work smart and hard, spend your time and resources effectively, be persistent and sooner or later, you will have success, you will reach your goals and earn enough money to live the life you ever dreamed of. I hope this video was helpful for you and I was able to impart knowledge to you, give you new ideas or simply inspire and motivate you to change your life in a positive way. If so, please leave a like and write me your opinion and content requests in the comments. If you have general interest in content about topics like make money online, stocks, luxury and lifestyle, subscribe to the channel and press the bell button to not miss a single video. Thank you very much for your interest and especially for your time. And hopefully, we see us in the next business meeting.